So in the last video, we left off at our closing entries right here. Again, just to reiterate, step 1, step 2, step 3, step 4, always in the same order. Close your revenues, close your expenses, balance income summary, then close income summary, and close dividends. Now, as I taught you before, every single time that you do journal entries, you have to do posting to ledgers. So I'm going to take these journal entries and post them to the ledgers. And so here they are. Now, the reason you don't see any yellow highlighted ones on this is because these are all permanent accounts, excuse me. Here we go. Let's take a look closely. Let's take a look. So notice how in the 4-column ledgers, I'm writing the word closing. Up until now, we've wrote nothing in here. So now these are closing. So retained earnings is closed. Dividends is closed. See how I have the 2 lines? That means it's closed. Putting a 0 is not closing the account. The 2 lines is going to close the account. Here's my income summary. Here's my revenue account. Here's another revenue account. And here's my expense accounts. All of them now have a 0 balance. When they start business on the next day of the accounting period, they'll all start with a 0 balance on them. Okay, so after posting closing entries, the very last step in our process is called a post-closing trial balance. Again, to reiterate, the only reason we do a post-closing trial balance, the only reason we do a trial balance is to make sure that debits equal credits in any previous journal entries you've done. And here's what it looks like. It's always going to stop, it's always going to stop at retained earnings because every other account below this is a temporary account. These are all my permanent accounts. So I'm always going to stop at retained earnings. Again, I just copied these balances from the ledgers. Okay, the next thing we need to talk about is the accounting cycle. Just so you know what happens, there are some questions in it. So it's really important to keep track of what's going on here. Okay, we're going to talk about the 10-column accounting, the 10-step accounting cycle. And it'll take us from the first thing we did, which was in chapter 2, I should say, all the way to chapter 4. So here are my 10 steps. Step 1, transactions are analyzed and recorded in journals. So that's the journalization of the day-to-day activities that happen. And this is what we learned in chapter 2, where we were actually doing debits and credits. Then we're going to take those same journal entries and post them to the 4-column ledgers. This was chapter 2. Then we prepare an unadjusted trial balance. So step 1, 2, and 3 all represent chapter 2. And that's what we learned in chapter 2. Chapter 3 brings us to steps 4, 5, and 7, 4 through 7. First of all, step 4, we gather the adjustment data and analyze it. Step 5 is we prepare that spreadsheet, that 10-column spreadsheet. Now, you can mix up steps 5 and 6. It really doesn't make a difference whether you do the spreadsheet first or whether you actually journalize those adjusting entries and then you post them to the ledger. Once you put them in the ledger accounts, you now prepare an adjusted trial balance. So 1 through 3 is chapter 2, 4 through 7 is chapter 3, and now we're doing chapter 4. We prepared financial statements, then we did closing entries and journalized, and then posted them to the ledgers, and then we prepared a post-closing trial balance. So here's just kind of a little spreadsheet of everything that happened. It might be good to help you if you need to take a look at this. Okay, and then here's the second half of that. So the rest of this PowerPoint, there is not going to be lectures on it, but it is a sample illustration of a whole accounting cycle. Actually, you know what? I will make a video for the illustration of the accounting cycle. So as you do project number 1, which opens next week, and chapter 4 homework, it will help you.